and viewers probably saw on the last video, I talked about pulling up and sharing my charts, and it did not work. So, guys, I'm not promising to be a YouTube guru here. What I'm giving you guys is stock news, updates in the market, and then my personal trades as well as my trading strategy. So, I'm sorry that I had that technical difficulty, but I do think that showing you guys the charts is really important. And I want to do a redo. So in this short video, we're going to review 3 of the stocks that I talked about yesterday in the podcast. So the first one is Apple. The second one is Lemonade. And the third is RCL. So that being said, let's get started. So I am going to be sharing the Thinkorswim application with you guys. I think I figured out, I just need to toggle it on. It's like magic. Okay. We are getting somewhere, only I don't like the way that's shared. So let's change the output a little bit and then let's switch it. Boom. Okay, we are in business, my friends. So I have the Apple chart pulled up right here. You can see that my time period is in a 90-day 5-minute. I like that time period a lot because the 5-minute candles are a short enough time to where I can see what's happening, but a long enough time so I'm not like I don't need to watch it every single second, and I don't need to pay attention to really small moves, just what's happened in the 5 minutes. So I do love this time period for the charts. You'll see that I have a lot of lines on my charts, and that is the pivot strategy. I have monthly pivots, I've got quarterly pivots, and weekly pivots. They're all color coded. And then I also have levels for every day that look at what is the high, the low, and the average for the day. So those levels are also really important to start to see patterns, and that can really help with resistance points. So what happened with Apple? Okay, so I bought Apple and I was at an average of 121.15. So let's find that here on the chart. So that was my average price, and I had a sell level in past this 124 mark because that's a monthly pivot. So I felt very confident that it would get there. And then I decided to sell right between the monthly and this weekly pivot right here in the 125.30 level. Of course, there's other pivots up here, and there were possibilities of it going higher, obviously. But, for this strategy, I am trying to buy at a lower significant pivot point or below the pivots there, and then sell at the higher point that I know it's going to get to. So again, just, being dependable. Obviously, I could have gotten a lot more out of that Apple trade, and I didn't. And that's okay because I made 4.15 points. That's a lot on a swing. My goal is to get a 2.5 to 3 point gain on every swing. So I'm really happy with it, and I'm going to take it. What's really interesting with the Apple stock, though, is that I would definitely recommend it for a long-term investment still. So if you saw that I sold Apple, do not think that it's necessarily a time to sell. If you are holding for a long-term strategy, I think it's a really great long-term buy. That being said, let's dive right into Lemonade. So I wanted to talk about Lemonade because it was a swing trade I entered into. My average is 92.11. So you can see, that we've got a really great spread on this ticker and some really strong resistance points down here. And that's why I felt like it was a really strong swing. So I am going to go ahead. I'm at 92.11. So it's at this like middle, rotating around this middle monthly pivot here. And that's okay. I did enter in this swing for more of a long term. So I'm giving it room to grow. And I shared with the podcast that my next buy level was at 84.40. And let me show you where that's at. It's It's right down here. And the reason why is because it's really near all of these lows of the day down here in the past, few days there. And then it's also right before these strong pivot points where I just don't want it to come here, bounce, and then I don't get anything. So I wanted to start, having my next ad down there at 84.40. And then I'll have another, more ads as it goes down to 82.60. And I'm not worried about this unless it goes, past this level here, 78.24. At that point, then I can kind of think that maybe I was wrong on this trade and I need to reevaluate my plan and come up with an exit strategy and a new plan to get out safely. But I don't think I'm anywhere close with this ticker. So it is right now, currently rotating around this monthly pivot point, and that is fine with me. I feel really confident that it will come back up to this weekly mark at 95, and I might even hold some for some of these higher levels up here. So I'll update you guys as that goes, but basically I just want to reiterate again, with a lot of these swing trades, you need to give it room to fluctuate, and you can't freak out if it's, down 5% one day, as long as that's within the room that you have, that you see with the ticker. So if that's, okay with your plan, if that's okay with your strategy, then don't let external stuff make you nervous about that. Unless, of course, there's like something huge where, they had a big default or, something horrible and catastrophic with the company. But again, I try to trade very safe tickers so that I can prevent those crazy things from happening. But anyways, let's move on to RCL. So that's the last ticker I want to look at today. The reason I brought this up yesterday is because they had a huge drop off the close. You'll see as the chart here focuses. So great. So we could see, it's been going along. It's been above this quarterly pivot at 77.49. And then, the day before it did kind of dip below. And then boom, we've got right off the close, right off the open, this huge drop down into the monthly. At that point, it was qualified. It was a qualified trade for my strategy. And the group that I trade with, a lot of people bought there at 71.89, right before that monthly pivot. However, at this point, I, really was concerned about RCL, just based on the news. And I just wanted to play it a little safe and give it some room. So I had my buy down at this weekly level at 70.50. And you can see here that I missed it by, just pennies, just a few cents. So it looks like the lowest level it got to was 70.72. Mine was at 70.50. So it's really painful. You can even see, I still have my alert there. Let's go ahead and cancel that out. But, this is what I was watching. And then, of course, those people, who follow the same pivot strategy I do that bought at the 71.80 worked out perfectly. They bought there, sold at the weekly pivot here, 73.37, and it's excellent. So, that's why I follow the strategy, though. I know it works time and time again, especially with these big dramatic moves right off the open. But I am still okay with how I traded yesterday because I did, make the profit I expected, and it followed my plan with Apple. I'm happy with my lemonade trade. And I just learned from these instances where I missed this trade. You need to, if you feel like you missed out on something, go back, study it, learn it, and then identify those same moves in the future and do better. That's what's so great about the stock market. Every single day that the market is open, it's a huge opportunity to do better. So thank you guys so much for your understanding as I struggled sharing the charts yesterday. That being said, I am going to go live today again for the Are You Green podcast. Cross your fingers that my chart sharing will actually work. But anyways, I think this was a good test for it. And I look forward to talking to you guys today because I sold so much of my swing trades. And it was a really great day. So thank you all again. Please click subscribe and click like. It means a lot to me. And make sure you're alerted for the next time that I go live. Take care.